What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're taking a quick look at American Express, ticker symbol AXP. Now, this is a company, as you can see here, a company was founded in 1850 and is one of the 30 components in the Dow Jones Industrial Average, right? So with the Dow climbing up for some reason, I don't know why, 33,600 going back towards its highs, in my opinion, a company like American Express is being left behind. And right here, it's at 164 3/4, and in my opinion, this thing should be at 184 3/4 right now, and that's conservatively speaking. And we're going to jump into the numbers. Why? I actually made this video a couple of times. This is like my second or third time making this video. I can't lie, because every time I make the video, I just consistently keep rambling about all these points, and then the video is just astronomically too long, and it just kills the whole vibe. It kills the whole mood. So I'm going to try to speak a little bit faster and try to make this video much shorter than the rest of the ones. But right here, 164 3/4, and we're looking at a market cap of 123.5 billion. You're looking at a PE of under 17 with a market approaching its highs. In my opinion, that is undervalued. They pay you a healthy dividend to own it. Keep that in mind. 123.5 billion market cap. We come down here, we look at 2021, you're looking at less than 44 billion in revenue. But if we do our little market cap to total revenue comparison, you will see that at 123.5 billion market cap, that is less than 3 times total revenue of 2021. Now we switch over here to the quarters. March 2022, 11.8 billion, we'll call it. June 2022, 13 billion. Add those numbers up, you get 25 billion. So if they stay on course with these numbers for the remaining 2 quarters, you're looking at total revenue 2022 of 50 plus billion, with, we'll say, if the stock stays flat, you're looking at less than 2.5 times total revenue for the current year. Not last year, also for the current year. Right? 2021, less than 3 times revenue. 2022, if they maintain these quarterly earnings, you're looking at less than 2.5 times revenue, which, if you watch my channel, you know I feel it is tremendously undervalued. Low PE, low market cap to revenue ratio. Now we switch over here, we look at the daily on stock charts, and I just want to show you, this is, like the bottom they bounced it off of. You can say it wasn't really a double bottom. However, the markets did start to rebound here around this time, and it took AXP with it. So they brought it up to the 50-day moving average here of a little below 150. This is when the company posted earnings, and as you can see, popped to about 161 on the news of, yet again, another beat. They brought it down back here to the support level, had it retest, and has bounced and climbed since then. These green lines, by the way, are the Bollinger Bands. Depending on the stock, sometimes a stock really tightly stays in that Bollinger Band range, and you can try to trade it and play it off the highs and the lows. Sometimes you can see a stock just completely break down or completely break up out of these bands. So obviously, it's not always the best indicator, but as we know, every stock is different. But right here, I wanted to show you guys, first of all, it's at the top of the band here. You can see 164.94 is the top of this band here. So we might have a little bit of a hesitation here, but more importantly, that's a touch below 165, and if we go to 165 and slide over, you can see, look at that. That was support for these 2 days here. Here, it bounced off. Here, it bounced and closed there. Here, it bounced at 165. Here it bounced and went higher off 165, and the day before you can see it stopped at 165 and closed just a touch below it. So this 165 level is going to be key. But also, this is the MACD that has been raging, obviously. This is on the daily. I mean, the stock's been up essentially 4 straight weeks. So, of course, the daily MACD is going to be pretty high. But we're looking at a 200-day moving average of 167.40. And if we switch over here on the weekly, you can see, first of all, the MACD crossing here, which obviously is a bullish sign. And if we switch over here to the 50-day moving average, 167.58. So these are the next 2 key levels. The 165 level that it has to break through and close above, and then both of those moving average levels of roughly 167.5. That is really going to be the indicator when it closes up above these levels. It's going to climb back into the 180s towards the top of that band, in my opinion. But switching over here, I just wanted to show you guys one last thing before I let you go here, because I like consistency. I say it all the time on my channel. First of all, if we switch here to a 1-year chart, right? This is TradingView, 1-year chart, and all I'm doing is scrolling the mouse wheel down, right? I'm just backing it up. And we're looking at, what is this? December 2010, so we'll call it 2011, right? We're in August of 22. So that is 11 and a half years times 4 quarters per year is 46 total quarters, right? And look at the greens along the bottom. If we count the reds, we have 1, 2, 3, 4, 5, 6, 7, 8. 2 of them happening in 2020. Look at that, October 2020 and April of 2020. Okay, so if the pandemic didn't happen, in my opinion, it might have only been 6 misses out of the last 46 quarters instead of 8. But we'll call it 8. It is what it is, right? First of all, looking at this, you should be fairly confident investing, especially long term, in a company like American Express, right? Because this is a company, as we can see, stock price has grown over the last 10, 12 years, and they're consistently beating earnings and increasing dividends also. But if we come over here, if we just look at these numbers, look at this. Again, this is 2020, pandemic times, very, very slight miss on EPS side, and they beat on the revenue side. This was probably one of the worst quarters, and it was right after COVID started when everyone was locked down and, spending was decreased. And the company still brought in a decent amount of revenue. We switch over here, you're looking at a slight miss on the revenue side, 9% miss on the EPS side. Again, 9% miss on the EPS side with a beat on the revenue side. Look at these slight misses. Slight misses. This is what I like about this company. They basically consistently always beat earnings, and if they don't, look at this. That's in line. Look at this. That is in line. And then if we come over here to the last one, revenue beat with small EPS miss. So, in my opinion, and it should be your opinion also, looking at those numbers, looking at these earnings, basically this company is probably going to beat earnings, we can say 9 out of 10 times for the most part. But I also wanted to leave on a short-term note, because I know I always talk about, long-term investments, and, I leave some of my traders hanging out to dry. And I know a lot of us, we like our short-term money. Definitely nothing wrong with that. But if we switch over here, I just wanted to tell you guys, based on the earnings that we saw, I just want you guys to put this on your radar, even if you're a short-term trader, not an investor, because this is a phenomenal company, in my opinion, to play for earnings. If you want to roll the dice with some speculative, cheap, out-of-the-money, like long calls, go long some calls, going into earnings on American Express, usually, 8 out of 10, 9 out of 10 times, you're going to see a beat and you're probably going to make some money. So if we saw this bottom here at 135, and then the next couple of days it starts rising, right, and we're up here at 145, 146 level, and we see that this company is posting earnings on the 22nd, the following week, right, I missed it. I've had a bunch of stuff going on here on my personal side here at the house. So, I apologize that I didn't bring this to you guys sooner, and I also apologize that, I'm not putting out videos as often as I would like to be, and that's on me, obviously. It has nothing to do with you guys. But basically, if we did happen to make a video and discuss this before earnings, I would have told you I am 90% confident that you should step in, buy some calls, or even buy some shares here going into earnings, because they're probably going to beat. And I like to roll the dice. I like to be speculative. So here at like this 146, 147 level going into earnings, I probably would have bought like mid-August, 170s or something like that. And, a lot of people might have knocked me for going so speculative and going so far out of the money. But then you see the next day, the stock opened and basically hit 160. So I would have made very, very healthy returns on my speculative roll of the dice 170s knowing that the company was at minimum going to have a small pop to 155, 158, 162, or whatever, and more importantly, it would have continued to grow after these numbers, right? So they pulled it back. With the rest of the market, it looks like it retested these support levels and these resistance levels before posting earnings, and then has been slowly rallying, bouncing off the moving average, and climbing. And as we speak, the stock right now is at 165. So it's 1:13 in the afternoon. There's still roughly 3 hours to go before the close, with the Dow slowly climbing up almost 300 points now. So if everything stays the way it is, in my opinion, this stock is going to close above the 165 resistance level that we spoke about before, and then probably tomorrow or Monday, Tuesday, the latest, you're going to see it rally up and probably try to break through that 167.5 level that we showed on the 50 and 200-day moving averages on the daily and the weekly on the stock charts. But I just wanted to leave it on there because I know a lot of people have short-term capital, not long-term capital, and I know I mostly kind of talk about long-term investments. So, just throwing a little trading idea out there. I do know we just missed it here, the end of July. However, what does that mean? That means mid-end October is going to be the company's next earnings report. So you have 2 months roughly to keep an eye on this, throw it on the watch list, and, make it your business to potentially take a position in AXP before their next earnings release. But that's just me. That's just my 2 cents. So once again, I'm going to stop it here. This is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you appreciate the content I'm putting out, please press that subscribe button. It really, really helps me out when you guys do that. I really appreciate all the support you guys are giving me. And if you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. And like I always say, moving forward, I know markets seem uncertain, markets seem volatile, but I want you guys to stay sharp, do all of your due diligence before you take a position. I know it's slow, I know it's tedious, I know it's annoying, but, like they say, measure twice, cut once, cross your T's, dot your I's. Make sure you don't jump in the water when there's rocks there. Just, all the little cliches and one-liners we can say here. Just double check yourselves before you put your hard-earned money, your hard-earned assets at risk. Because in the short term, you can get screwed. And if that's the kind of trader you are here in the short term, you have to stay 10 times sharper than the average investor. All right, we'll leave it at that. So once again, thanks for stopping by. I wish you all well, and I'll see you guys in the next one.